Welcome to Stock Market Investing with the ARMR Report. This is the in-game update. We do this every day for ARMR Insiders when it's relevant. And today it's definitely relevant. I'm going to share it with all of you later today after the close. So quick reminder of what we're doing here. The ARMR Investing Way is a strategy I use to manage my own personal capital. So the information I'm sharing with you is a guide to perhaps help you manage capital correctly. That's the point, right? ARMR Report stands for Algorithmic Risk Management Research. So it starts with managing risk. Then we capture upside when the window's open. And today, the window may be opening just a little crack, okay? So remember, I'm not telling you what to do. I don't know you, right? I don't know your risk tolerance or what your goals are. So take this as a guide and then do your own due diligence. The ARMR Investing Way is a three-stage process. We build our whiteboard of fundamental ideas so we're ready to put capital to work when the second stage of our approach, which is using algorithms to tell us when to execute, when to put capital to work, when to take it off. When the algorithms say it's time to put capital to work, we don't have to scramble. We know exactly what stocks we want to do, right? Because we've been investigating, we've been doing research, we've been refining our whiteboard, putting these names at the top of our board where the chart patterns and the fundamentals mesh, okay? And so that's what I'm going to share with you in a minute here. What are the stocks we're looking at on the whiteboard for inclusion today if all goes well between now and the close? And of course, the third stage is always to use stop losses. So even after I discuss this with you, please understand and recognize that if we put capital to work today and stops are hit tomorrow, we're out, right? And then we wait for the next opportunity. So let's dive in. I started with a screen of the Nasdaq 100 because this is the key right here to the market's move today and whether or not we're going to see a risk-on signal different than the red risk off we have right now with the ARMR report, okay? So the ARMR report is going to share with you different segments, one of which is the risk monitor, and it's been red now for a while. One reason is the Nasdaq 100, which is a major part of our approach, has been negative this whole time, really going back to here, okay? This three-bar reversal down, okay? If we close above the 50 today, it's very possible we'll have a risk-on entry point in the Qs. That will join the Dow and the value index, which have been on a risk-on, signal all the way through these shenanigans of the last few months. Money's been flowing into the industrials, right? So that continues to mount. If we get another major component, which would be the big cap tech stocks, then we might have the footprint of institutions putting capital to work. That's the confluence we're looking for. And while it may not be a full risk-on green signal because we're still missing the momentum index, the ARK Innovator Fund, the IBD 50, these things are still kind of risk off. If we have the Dow, if we have the Nasdaq 100, if we have the small cap index, okay, putting in a double bottom at the 50 and closing above here. If all that occurs today, then we're going to have a shift back to what I call risk on yellow, which is we don't have 100% confluence, but we have enough to put money to work, right? The ARMR portfolios, we already have somewhere around 50% invested in the swing and in the invest portfolio. We have three different portfolios: swing, invest, and index only. Index only is 100% cash. That portfolio will put some capital to work today at the close if we get these types of closes, right? If we're strong into the close, okay? The swing strategy is probably 75% long right now. We might get close to 100%, okay? And the invest portfolio, which has got about 50% cash, will start putting more money to work. I don't know if we'll get quite to 100, but we'll put more money to work. Probably not 100, because if we're not really a risk on green, we don't go that aggressive all at once in our more conservative investing strategy where we trade less, right? That strategy doesn't want to put money to work and take it out the very next day. So we try to go a little bit slower and work with different names in a market like this. So let's get to what the stocks are that we're looking at in the portfolio. First of all, we added, cliffs. If you want to understand why we are willing to put money to work, why are we willing to put money to work before risk on green, risk on yellow? So when it's risk red, why do we put money to work? It really depends on the type of red signal we have, and I've been trying to convey this to ARMR insiders. Last year, February 24th, risk off everywhere. It was a footprint of institutions completely dumping stocks. And so we went to 100% cash everywhere. This year, it's a different type of year. It's a muddled year. We don't have confluence, but we have a couple indexes that keep going higher. And so while the index-only portfolio is strict and goes to 100% cash on a red signal, the swing and the invest portfolios continue to put capital to work in this type of environment, okay? And here's the reason why. We were putting the money to work just yesterday in the swing portfolio in Cleveland Cliffs. And then we get a stock that jumps 16% today on a good piece of news. So there is money being made in this market, and we're willing to put some capital to work. Now, what are we looking at to add to the portfolio today? Here are some of the top names on our list. Activision, okay? What we have here on Activision is an enormous, as I'm trying to shrink it down, cup and handle, okay? And the first test of the 50-day moving average after this cup and handle breakout, okay? So that is an attractive entry point from a risk-reward standpoint. All right, probably the low of the previous day would be our stop. Okay, moving on. Let's look at Cisco. Okay, Cisco is breaking out of a huge, Cisco is breaking out of a huge pattern here. And the low of this big up day would be our stop. And we're saying we had a big up move out of a huge base on Cisco a couple days ago. The move has been digested 1, 2, 3 days. Typically it's 4 days of consolidation. On the 4th day, you should get a move higher again. So I'll put capital to work here. If it takes out the low of the big up day, we're out. If it accelerates higher, then this whole pattern begins to make a whole lot of sense. What else in that space looks good? CIEN and Cisco tend to run together. What you have here really is a cup and handle, breakout consolidation on top of the 50-day. Okay, and again, just widen this up. I would say the low of the previous day is the stop. Okay, don't forget Infinera if you're going to look at those other two companies. Infinera, Cisco, CIEN, they all run together. Infinera is not my favorite name because of that pattern is not quite as solid as the others, but it's something to look at. Now we have to look at semiconductor stocks. Now you can choose any semi stock you want. I'm just sharing with you the ones that fit my eye with the fundamentals that I like. That MRVL breakout right there is a thing of beauty to me. What's a thing of beauty? A thing of beauty to me is when the reward to risk setup's optimal. And the way for it to be optimal for me is that I know exactly what my stop is. It makes sense. It fits the pattern and the ARMR Investing Way strategy, and there's potential for major upside. There's Lucky right there. She wanted to come in and say we should all be buying Chewy. Okay. Qualcomm, double bottom at the 200-day moving average. Just exactly the type of a chart pattern we're looking for from a reward to risk standpoint. Okay, what's the stop? Clearly the stop is the low of a couple of days ago in the 200-day moving average. So if the Nasdaq 100 breaks out and semis are going to go, this is a name that fits the profile for us. How about Xilinx? XLNX. Double bottom at the 50-day moving average. Perfect. Okay. Double bottom at the 50-day. Right here, this price right here, that low of yesterday is going to be the stop on that trade. Now, again, those are just 3 examples in the semiconductor space. You could throw at me a whole bunch of ideas. I would say, yeah, that works, that works, that works. I'm just sharing 3 that fit for me that are on the ARMR whiteboard, okay? Maybe one other name it's worth talking about. We own shares already in our portfolio of Facebook, okay, which is breaking out. We bought it in here, and so we're still on this trade. And we already own Microsoft, okay, so we're waiting for that to blossom. We'll see. It keeps holding the stop, which is great. What we need to see it do is break out of this pattern here. We don't know if it will. And we own shares of Intel in the portfolio. Okay, this is an island reversal extraordinaire with a cup and handle base and a breakout. And if this thing can take out 65, it could get legs. Quick note on that. There have been rumblings, right? The possibility, the potential that China is going to meddle in Taiwan. If that's the case, then semiconductor companies that have their own foundries should begin to outperform. We don't know. We'll see if that's the case. Keep your eye on that name. Last thought is Twitter. I'm not loving the action today, but here's what I like about Twitter. And so it's on the top of the whiteboard in case we get the right setup. There is a 5 wave move in Twitter, with the 5th wave breakout being extreme and a pullback to the 50-day moving average. So what we like to do is buy the first pullback to the 50-day. This is a double bottom right on the 50-day. We might own shares of Twitter by the end of the day. Okay? Now, I'm going to wrap up with this thought. I know some of you are going to ask me, what do I think about the cannabis stocks? So let me get that out of the way first. I love cannabis. They're having a big update today. That's great. That doesn't change my opinion that it's risk off right now in cannabis. I need more than 1 day of a recovery to get me to put money to work. Okay? So put that aside. We're not adding there. We are building a portfolio with allocations to different groups: energy, precious metals, industrials, Nasdaq 100 type of names, and eventually, but not yet, innovator type of names. Okay? So let's end on precious metals. This is important. This is the month, this is the day, this is the week, right? Where we're supposed to see a lot of weakness in gold and silver. It's the end of the month. They always beat them up the end of the month. Okay. And there's the price of gold through the ETF GLD. This happens all the time this month. So the question is, are we going to be buying weakness in the midst of strength? That's major weakness right back to a very strong uptrend with a double bottom in place. Typically, the stocks lead the bullion. So now let's go see. There's a double bottom in place in the bullion. What's going on in the gold stocks? Okay, that's a higher low in GDX. A higher low in GDX, holding above its long-term uptrend. So what you have now is a positive divergence beginning to form between equity and bullion, which makes sense at the end of the month when they usually beat up bullion anyway because of the futures roll. We have non-farm payroll this week, all that kind of shenanigans. What we want to do in these stocks is own them before they blow out. We will not be chasing these stocks at the ARMR report when they're up big. If you choose to wait for the big breakout, please don't come on the show on Saturday and say to me, hey, let's buy all these stocks now that they're up 15%, because we're not doing it. Okay? We're going to own them right down here where the positive divergence shows up, right? And we're going to use tight stops. This is pretty obvious right here. It takes out the low. It takes out the low right here, and this game is over. Okay? We're out. Not a lot of risk in this situation right now. So we like to put capital to work when the reward is worth the risk. If these stocks break out and run into the Basel III ruling late June, which we expect them to do, and I'll describe and explain it some other time, then the divergence that's starting now is the beginning, and that's where we want to put capital to work, because the reward is worth fairly minimal risk here. You know, we'll have a bad day, the whole thing will implode, and we'll be done. And it's not a huge loss. Keep our losses tight. Right? Here's our favorite name in the space, Newmont Mining. Look at the outperformance in Newmont. Above the 200, above the 50. Okay? How about Royal Gold? Made a series of higher lows, yet to break out, right? But when it has that big up bar, I don't want to be buying that day. Okay? And what I really like to do is, you know, my first play here is going to be owning the royalty plays. I like Wheaton Precious Metals, where we get higher lows. See those higher lows? That's what we're looking for. And Franco-Nevada, right? Higher lows. That's what I want. You could do whatever you want. I'm not telling you what stocks to buy. You probably have your own whiteboard of your favorite precious metal stocks. So have at it. I'm just going to focus my capital on the top tier institutional favorite royalty plays and Newmont, because Newmont's my favorite name. Okay. Those are the stocks for me. X% of the portfolio for those stocks. See if we start making money. If we earn the right to take the risk and they blow out and then create another base at a higher level, then I might add other names and increase my exposure because I've earned that right. Okay? Those are my thoughts for you today. I've got to hop here and get ourselves ready for the close. ARMR Insiders, don't forget to check the Slack room, hashtag, the channel, portfolio updates at around 3:30, 3:45 latest. And I'll let you know where we're going and with what, because if it's a strong close today, I've already been updating the Slack room with swing trading ideas, right? The swing portfolio's already been added. But come 3:30, if this is a risk on entry point, we're going to start adding some more names to the invest portfolio. Okay? So stay tuned for that. And I'll see you guys on the flip side tomorrow morning, 8:30 sharp for the morning call. All right? Take care, guys.